In the next 5 minutes, I'm going to show you one of the most popular and preferred entry models in the Forex market. I will explain the concept of the fair value gap and how to use it for highly precise trade entries. The fair value gap is one of the most talked about strategies in the smart money way of trading. This gap usually forms when there is a sharp imbalance between buyers and sellers, leading to impulsive price movements. And these movements create a gap between candles, which you can use as an entry point for your trade. So let's take a look at how this appears on the chart. Before we proceed with this video, make sure to check out all the links below the video and join our free Telegram channel where you can find more trading information, trading setups and updates. Now, there are two main things when you're trading the fair value gaps. First and foremost, you need to know what is the market direction, and you're only trading in confluence with the trend. So say for example, we're looking at the chart here on euro dollar, this is the 1 hour time frame. We see that we're moving in a bullish trend, and that also means we're only going to be looking for buying opportunities. The second thing is that we don't just trade fair value gaps in the middle of nowhere. We want to make sure that those fair value gaps occur at key levels or key areas in price action. And something that I like to use in combination with fair value gaps is supply and demand zones. If you don't know how to identify supply and demand on the chart, go ahead and watch the video that I've got on this YouTube channel. There's going to be a pop-up button somewhere on the screen right now. But I've got this demand area down here, okay, before the beginning of this bullish impulse, and all I need to see is for price to pull back towards this area. As soon as it touched down there, I'm going to be looking for the appearance of a fair value gap, which will give me the exact entry point. So I'm going to drop down to the 5-minute time frame. I'm going to go from the 1 hour chart down to the 5-minute chart, and all I need to see is for price to give me that pullback. So fast forward a little bit, and you can see we've already got that pullback that we're waiting for. Now I'm going to zoom the chart in, and I know that anywhere within this area is where I'm going to be looking for this fair value gap. But we've basically already tested this demand zone. And since we are in an uptrend, I'm expecting that the market will actually continue higher. So the next thing we see right here is a combination of 3 candles. And this is where our fair value gap lays. So we've got the first candle, this one right here. We've got the second candle, which is basically the middle candle in the fair value gap combination. And then we've got the third candle. Now, it's very important that you look at the first and the third candle. So what I want to pay attention to is the highest point of the first candle, which is this upper wick, does not match the price, the lowest price of the third candle, which is this wick down here. There's got to be a gap in between them, and this is our fair value gap. So I'm gonna mark this zone out like this, and this is where we basically look for entries. So we're gonna place a pending order, okay, a buy pending order. And we're going to place our stop loss just anywhere a few pips below this low. Now, when it comes to targets, you could be going for 1 to 2, 1 to 3, 1 to 2.5, or you could also be targeting previous structure in the market. So in this case, we've got over 1 to 6 risk to reward ratio, which is a pretty decent setup. Now, we've already placed our pending order, so all we have to do is to wait for price to give us another pullback here on the lower time frame, and then bounce off of this fair value gap, because this is what we expect from this disbalance in price which occurred in those 3 candles. So as you can see, we got tucked into that trade, and the market continues back to the upside. But again, it's very important. I'm only giving you the basics of the strategy. Now you have to decide on which pairs you're going to be looking for fair value gaps. What is going to be your risk tolerance, or basically your risk management with those trades, when you're going to move your stop loss to break even and so on. If you're going to be taking partials throughout this whole period, that's all up to you. But those fair value gaps, they work pretty well. And if you look at the 1 hour time frame, even right here, we've also got another fair value gap right here, which also played out very well. Now, as you can see, this is the three candle combination. We've got the first one, we've got the middle candle with a really nice bullish impulse, and we've got the third candle right here. And in between the third and the first candle, we've got this fair value gap. Price pulled back to this area and it then bounced off, continuing to the upside. Now I'm going to be honest and I'm going to tell you that this is more advanced information. If you're just starting out, the best thing to do is to sign up for our free trading course. It's on our website trendlineforex.com, or you can find the link in the description below this video. I'll see you in the next one.